of an incorporation of different things put together in order to assist those that don't have time to analyze. Now, what we are looking at is a synthetic, and it's a FX volume 60. Now, what we are seeing here can be applied not just in synthetic, but I decided to narrow this to synthetic because what I'll be showing us on Forex is straightforward, simple, and straightforward and simple. Now, we can apply what I'm showing here across all the different indices here as I'm scrolling here. I'm showing, I want to, are we seeing my screen, please? Are we seeing my screen?
Yes, we can see us. I can see your screen.
Okay. Now, so these are some of the indicators I use. In fact, this is a system, complete trading system. Now, this trading system shows a red line upward, which is called the channel. And the channel has a midpoint, which is this dotted line in the middle. Now, for the synthetic, which is always most times recommended for beginners into the financial world of trading. Now, this is straightforward. It just tells you, you can see a lot of write-ups here. I don't like system like this with a lot of write-ups, but for the purpose of just making money and for the people, very busy people that hardly have the time to go full time. Now we can leverage on this. It gives you a lot of information. It tells you the market has a high and has a low. So the upper band indicated by this red line is the high, and the low here indicated by this blue line is the low. So indicator automatically tells you here where my cursor is the high and the low. Now these are very long numbers. I can't really store them in my head, so I don't bother myself storing these numbers on my head. I'm not really good with numbers, but there are those that can actually keep these numbers on their head. Now it has a spread. The spread is what it causes you to go in. And it has the server time and the local time. Now these are not details we bug ourselves with. What we look at is from here. It shows you the downtrend. It shows you the stochastics. The many indicators, close to 6 indicators are involved in analyzing the entire market. So before we came in, I was test running the indicators just 5-10 minutes ago, and $50 was made out of it. Now this is as good as trading it on live account because I've been test running it on demo, and I also tested it on my small $20 account to see how it goes. And this is what it was generating. I entered this market since on the 5th yesterday. This particular trade was since yesterday, and it has generated up to $280. So one can just leverage on this straightforward, simple trading. When it is here, you click sell. When you get sell, when it's approaching the midpoint, you can come out, you can partially come out or come out completely if you don't want to reach down here. But for intermediate experienced traders, there are other things to add to it. So I added other things which I'll be talking about. And even for experienced traders, some might not be familiar with some terminologies. And so I added them here, which I'll be talking about them when we go into the Forex. But this complete system tells you whether the market is downtrend or uptrend. So it tells you the market is downtrend. Now, you see there are some write-offs here. There is turncoat resistance, turncoat untested resistance, verified retest resistance. It's telling you that this market has retested this resistance for the first time. Then when it retests it the second time, it tells that resistance is very strong. The moment the resistance is broken, it calls it turncoat support. When a resistance is broken, a resistance level is broken, the resistance automatically becomes a support. So you can see untested resistance, another resistance was created. Now, this whole system applies high level market analysis with neural networks. So a lot of thousands of algorithms are happening. I've never used a system like this. Most of them are paid, highly paid, for you to have access to neural networks where a lot of artificial intelligence are doing a lot of activities in the background to give you the data for you to leverage on. It is based on that data across many assets, it gives you verified resistance. And this resistance is verified. So meaning you can trust this resistance. Now, there are resistance that are untested, waiting. When the market reaches there, you can just scalp and just take. We already know that this market is supposed to be going upward. Why? Because this red line and this blue line are pointing upward, not downward. They are pointing upward on a 15 minutes time frame. When I go on 1 hour, you see it's pointing downward. And that is why we are seeing it's telling us it's uptrend. Uptrend in the sense that on the higher time frame is downtrend. 4 hours is downtrend. 1 hour is telling it's uptrend. But now overall, the higher time frame override the lower time frame. So if you just want to hold part just little money and just come out, I just stick on the 15 minutes so I can just make little money and come out because my 15 minutes, 4 hours, and day aligns. So I stay on my 15 minutes. It's only one hour, even though I didn't check the 30 minutes. Let's say 30 minutes. 30 minutes saying uptrend. So 30 minutes and 1 hour is saying uptrend. While my lower time frame, 15 minutes, aligns with the 4 hour and daily. So of course, I go sell. Now, even if I don't want to check the other higher time frame, I just need to check, am I at a verified resistance? I just take from the verified resistance to this blue line. This blue line is also a support. This red line is resistance. Now, there is another indicator I asked here that catches the purpose of this zigzag indicator you're seeing in the inside a verified resistance. This is double indicator resistance. This channel, blue line, red line, is called the Charlie Walker system that combines more than 10 different indicators to come up with its own predictions analysis. So when it adds that, it gives you its own alert. It also gives you an alert. We might be here, you may see the way a window will pop up giving me alert to enter sell or to enter buy. Now on this verified resistance level, there is a retest one. My aim is to sell from this point and come out. So this particular candle you are seeing here, give me what I wanted. So I just come out because I understand that when the candle touches this line, I'm supposed to jump out and get out to the market. Why? Because this particular point I should be thinking about buying. So this verified resistance close to support, I'm not supposed to take it serious. I should be thinking about buying. If you enter any sell here on the lower time frame, you know that you're not supposed to stay longer because 30 minutes and 1 hour already telling me we are on an uptrend. But why I won't take them really serious? My channel is pointing downward, telling me that this market is coming downward. 4 hours, particularly 4 hours. Look at 4 hours. 4 hours is already telling me that we should be coming down. You can see that there is a turncoat resistance. When you see a turncoat resistance, it's telling you that a support, it was previously a support region, and the market broke it and came down. Since it turned, the market broke it, it has turned to a turncoat resistance, telling me that I should be thinking of selling. So I stick to my 15 minutes. The best place we should have entered was at this point, where we already have our spike catcher. This zigzag we are seeing here is called the spike catcher. Where you find the spike catcher aligning with the resistance point, this red channel line, and then the verified resistance. This is triple signal. You can see how the market reacted and came down. So from this point to this month, you are good for the day because this is untested resistance. This resistance has not been tested yet. This is verified resistance. It's not a tone code. So they were all resistance waiting. It cleared all the support down to this particular lower channel line. And this means that you're supposed to come out at this point. But now you can see another what I call the fair value gap, which I'll be telling us what it means. Because from this candle to this candle, there is no this impulsive candle, this bullish candle. You can see that there is no corresponding black candle. There is a gap between this point and this point. From this candle high to this candle low, there is a space. And that space is occupied by this bullish candle, meaning that when this candle formed, there was this bullish candle that went up. Then instead of this candle to come down, it didn't come down, it goes up. So that means when a buy was offered, when this particular candle was offered, right? A buy, this was a candle that took these cells, and this buy candle went up, and then it was an inducement or an imbalance. We call this an imbalance candle in the sense that this price, when it started from this point, it went all the way to this point high, and then there is a corresponding cell that we expected it to come back to this point, either with a tail and then go upward. So it leaves what we call a fair value gap. This fair value gap, we mark it. It's a liquidity point, so we mark it. So instead of me marking it like this, I decided to get an indicator that automatically picks it up for me. So I'll be explaining that because we cannot, all this thing I'm talking about, if I want to talk about it today, we cannot finish it today. So I just want to introduce this system just for busy people. You can just leverage how you can use it. Is just enter sell from here or enter buy from here. You look at verify resistance at places where you enter sell. Verify support at places where you enter buy. You can see this point at verify support. Getting a verify support at the point where they intersect the line, this particular support line, it tells you it's a point for you to buy at the verified support. So we look at buying at the verified support. Sorry, I've not been charging my laptop seriously. Before it runs down, let me plug in my charger. Sorry about that. All right. Thank God. Just a moment, please. Okay. Okay, I'm back now. So the verified support is the point where you buy. The verified resistance is where you sell. So there was a first touch, which was by this candle. The second touch was by the first. The first was this confirming the verified resistance. Then this is the first retest. Then if you have a second retest, that means that it's a very strong resistance, which I doubt. But well, I can't really doubt it because on the 4 hours and daily is telling us that we are on the down trend. So if this market keeps on and then breaks this and makes this verified support, when it breaks it lower, automatically this verified support will become tone code support or tone code resistance, not tone code support, tone code resistance. The moment it breaks it, the support automatically becomes a resistance. So you can just leverage 15 minutes, 10 minutes trade and make this money, or you get it from this point. So why I will not say it's my time to begin to buy, I'm waiting for this spike catcher, which is this red line you're seeing here, this red zigzag. You'll find the corresponding one down here. When it happened here, this is what happened. When there's an intersect, when they intersect at a point like this with the channel line, the trend catcher at a verified support, you can see verified support here, verified support, the triple signal here, this confluence is a major buy signal. We're thinking of exiting at the next verified resistance, which is at this point. Please, I need
Sorry
to know
to
whether
interrupt, sir. Please.
Yes, please.
Please, what did you call a major buy signal?
A major buy signal is when you have this triple confluence here of indicators. First is called the spike catcher, which is this zigzag. It's called the spike catcher. Second, the first is the verified support. That is the first thing you look at. The verified support, which is this one you are seeing here. Second, we expect most times, I don't know which of them appears first, but what you see first is the channel, this long channel. When the market comes, it touches the channel, the bottom of the channel. Then you have the trend catcher, which is this zigzag. The verified support itself is enough for you to even think of buying. But most times you'll find the verified support and the bottom of this channel, which is this line, that's your buy signal, not these arrows you are seeing here. No, we don't use those arrows to buy. They are just additional confirmations. You don't use these blue arrows or the red arrows. If you are following these arrows now, this arrow at this point is telling you to sell. So you see, you cannot follow this big arrow. We follow the triple or even two. If you can see, find the verified support area, you can just buy. You can just start scalping. But most cases, when you find the verified support, you'll also find, when you find the trend catcher, which is this zigzag, or sitting at this support region, which is the bottom of this channel, it's a very good buy opportunity. You're thinking of closing that trade at the opposing channel line, which is this red point, or when you see the verified resistance with the trend catcher telling you that you can begin to come down. And then this is for FS vol. So yeah, you can begin to go the opposite direction. It's telling you that whatever position you are taking here, it's time for you to close that position and take the opposing position if you want to. But for intermediate trade that you have done your analysis, you understand that the market is bullish. This is just for you to just take advantage of the opportunity available at any moment and leverage on it. So me, I entered myself when I saw this verified resistance, and you can see the market has been going down, and it's enough for me to jump out. Two trade I took FX vol, both of them FX vols 40. I'll be looking at even this was the trade I took FX vol 40. Now let's look at it at 50. Those were the trade I took at the verified resistance. Let me expand it maybe to be larger or so that you can see very well. These were the trade I placed at the verified resistance, FS vol 40. So you can see when I had this, my first signal was at the verified resistance. I wasn't there when this happened. When I saw the trend cutter, which is this zigzag you are seeing here, I don't follow these thick arrows you are seeing. I don't follow them. When it happened, I wasn't there. So when I came to the market, I was at this point, this particular point where I saw the verified resistance. I just took it already. I already had the market has touched the upper band of the channel. The trend catcher is there. So I know that the market, the next point is at the next fair value gap, which is this one you are seeing, this whole thing. This is a gap here. This particular candle left a gap in between this candle and this candle. There is a gap. This candle and this candle, there is a gap. And so, but it took the most recent, which is this. So from this point, which I entered, which is the verified resistance, I'm thinking of coming out at this point. I wasn't there to come out. So from this verified resistance, I'm thinking of exiting at the next verified support. So between this verified support and verified resistance, there is a fair value gap. A fair value gap happened between this candle and this candle. Between this candle and this candle, there is a gap. Between this candle and this candle, there is a gap. So it takes the most current, the most recent one, and then it draws it out for me. So I combine the fair value gap The verified resistance and support are all liquidity zones. When we talk about liquidity zones, are where the market makers are thinking of taking orders. They are liquidity zones where you take opportunity of the market. Liquidity zones can happen at a buy side or sell side liquidity zones. So every fair value gap is a liquidity zone. A fair value gap is a gap where there is no candle in between a candle. Particularly, look at this candle here. Between this candle and this candle, there is a gap. Not before this one, before this has happened. So, but the moment there is a corresponding candle on the other side, it becomes invalid. That means that this buy order has been completed. Whenever there is a buy, there must be a sell. When the buyers offered to buy, they expect sellers, by the time you buy, we also expect to sell. So automatically this transaction is completed. So it's called a fair value, meaning that this value has to be filled. So the moment it's filled, you're not seeing any line here. But before it got filled, there was this particular thing you're seeing, this particular rectangle, lime or blue rectangle. You're seeing light gap or light box you are seeing here was actually here. I'm just giving us an example of how these things are formed. So when it is bullish, when it is going bullish, you find this light blue. When it is bearish, you find this particular red or whatever color, I don't know how to call it. So the same thing happened here. So before going to fair value gaps, which I'm going to talk about it in forex, this system is just for us to start using and to start making money. Before I go into forex, and I think I should just talk about this for today. And probably if we're meeting again, we'll go into the forex. Just show us how to use this system. There's time, probably I will just go into the forex to show us how we can trade. Particularly, I want to concentrate on gold, the system we use to trade gold. Then I have for those that want to trade manually, this system is okay. For those that want to leverage on the robot, I have two robots. Let me see if I can. Okay. But before I go to talking about robots, I'm open to any question. Are we following? If we are confused to what I'm talking about here, but some of these things when
Mr.
you
Elijah,
begin to use it, you will understand better. Yes, sir.
I think we'll have a session where we set everything up from scratch, because
Okay.
for the people who are newbies, I can tell you everything you are saying, they'll be having stars in their eyes. Yes, because as a new person, when you're hearing all this, it's just like someone is speaking a different language. So we should have a station where we start everything from scratch, setting up each indicator so that they can set it up themselves wherever they are.
Okay. Okay.
I think we should look at forex. Sorry?
Sorry, I wanted to say, if I may say something.
Go ahead.
I'll wait for you to be done, sir, before I ask my question.
So you can ask your question.
Thank you, sir. So I wanted to ask if I have two questions. Number one is I've been having issues with my Windows system. I have Mac that works well, but my Windows, the one that I had installed MT5 on, crashed recently, for instance. I wanted to ask if these indicators are available for Mac, or if I have to have them on a Windows system. That's the first question. The second question is it possible, I don't know where Mr. Elijah stays, if it is possible for me to meet with you, sir, on either Saturday or Sunday, and then I can break it down for my sisters. I don't know if that
You'll have to go to Abuja, or he has to come to Lagos.
Oh, wow. Okay. So we just have to settle for
Zoom
online.
Yes.
Yes, sir.
Okay.
Thank you.
All right. I actually knew that we'll have to set this up from bottom up on how to set it up. But I just want to introduce us to the concept. And then, but let me go to the forex. Just tell us, this is for busy people, because I came up with this because I remember, sir, you told me that people that are very busy, they don't have time for all those analysis. They just want to know opportunity to buy, sell, and make their money and go ahead. But they still need to know the basics, understand what is happening.
Yes.
So that's why I came up with this. For those that even after knowing everything, even me, with all the things I know, at times I don't have the time and the energy to begin to do analysis. I just want to see clear. I understand the system. I know how the system works. When I see what there's something I want to see. When I see it, I just enter. Like this trade I entered, I didn't sit down do analysis. I also verified resistance. I just entered, and boom, this money. I've used it to make some money in my life account too. So, but that, and then the robots and all that. So maybe we'll set up another system on how to set up the robot and talk about all those stuff. So let me go about the forex. What actually I've been thinking of sharing with us. Okay. Let me bring in gold. All right. I hope we're seeing my screen.
Yes.
All right. Okay. Some of the things I want to talk about is liquidity points. And after many years of trading, we knew liquidity points as support and resistance. We see this is resistance, and we can color it red. And then we'll pick another point. We see this point is support. Now, these lines are not always straight. Let me just pick normal straight line. So we pick our straight line. When we started trading, we knew this resistance, and then we pick another level. Probably when the market was at this point, we say this is our support. But I noticed something. Let's say the market were at this point. Before the market went further, we were here. And then in my mind, I should be buying. I entered sell from this point, and then with the aim of when it gets to the point I exit. Then when this was or probably, yes, let's say I choose this point as support or whatever. Now, my aim was that probably when I get to this point, I should buy. And then at this point, I'm expecting that this is the resistance. Market should start selling. But known to me that there are market makers which are bent on getting me. And by this, I set my stop loss at this point. I set up my stop loss in order to enter sell. And most times I find out that my sell direction, my analysis was always right. But what was the problem? I set my stop loss. This particular place, I just put box now. Well, let me highlight it. Didn't do it a different color. This side that I just highlighted or shaded took me out because I set my stop loss maybe some few pips above my entry. This is where I entered. I entered here sell and then set my stop loss above the resistance. But this market went up thinking that then When I saw that it was going up, okay, I decided to say, okay, that's taking me. I thought that it's not going to go south, only for me to find out the market reversed with this candle. So as the market reversed with this candle, I became confused, frustrated. And I was actually right. So what happened? I went into real study to understand what was happening. You get frustrated. You think what the market, somebody is seeing your order, the broker is seeing your order, is taking you out. I started learning liquidity points at swing points. I started understanding that these are liquidity points. So as I understood liquidity points, I understood that brokers were positioned at a point that is called the order blocks, where they are positioned to take orders. And actually, they set the support and the resistance in order to trap retail traders. These points, liquidity points, was for them to sweep all the stop losses. And taking out the stop losses, this particular candle confirmed the direction of the market, that the direction has just been changed by what we can see obviously a engulfing pattern, a bearish engulfing pattern that aligns perfectly with the resistance. When this happened, this candle is where I'm supposed to have entered. By the moment this happened, I set my entry point at this point, waiting for a retracement. I always heard Mr. Ola talking about retracement. We enter the retracement. This is a perfect retracement. Entering here and setting my stop loss at this point. This is where I should have set my stop loss. Just a moment. So these are tools I'll be making available to some of us. These are tools that some of them are free, but it takes a lot of registration to get them, and then some little subscriptions to get them. So they will be available on this group. So this is an indicator we use to gauge our entry. So this is where I should have entered on this trade. And then target, just don't have to be greedy. Just if you enter from this point, just 1 to 2, you are good to go. Some people can just target 1 to 1, you are good to go. With a good lot size, you can see how the market on reaching 1 to 2, you can see the way it bounced back again. And then went back. Now, this is gold. Gold respects what we call order block. This is a block of order. Whenever you see this at a critical point, at a liquidity point, I don't like using these long horizontal lines because liquidity points are dynamic. They are not constant. They are dynamic in the sense that you mark it up. You take it and you mark those zones. Then you mark those zones, and the next liquidity point, you check where is the next liquidity zones. Now, I would have taken this point. This point is also a liquidity zone. The moment a resistance is broken, it automatically becomes a support. But before I go further, please, I want to know whether we understood what I just explained about the order block. This is an order block. This particular point I highlighted earlier, this candle, it is an order block. Why? Because it broke a resistance. And we don't call it resistance, we'll call it a liquidity zone. And this particular liquidity zone is called the buy-side liquidity, the buy-side sell liquidity, buy-side liquidity.
Buy-side liquidity.
Yes, buy-side liquidity. Call it the buy-side liquidity. Using any question, please.
I was just going to ask the two ladies, how they're seeing what we're doing. Is it making any sense? Or is it too difficult for you? Madam Joker? Famti? One of them is out.
We will blend, sir. We will blend. We will blend at the end of the day, sir. Where's
Okay.
my phone? We will blend, sir.
Okay. Now, let me start from where this trend began so that we can get the picture very well. This trend began all the way from here. Mind you, I'm looking at for 1 hour. Let me go on 1 hour so that daily you can go to, let me just go on 4 hours. The best time frame for most of this analysis, but you can just go on 1 hour. We're doing it on 1 hour. Let me just do it on the 1 hour. Right? Now you find out that this trend began somewhere here. Oh, sorry, just a moment. Let me just do something. Okay. The trend began somewhere here, from here. This upward trend began from here. So this level, this lower point is called the sell side liquidity. So I can name it, you can give it a color one, sell side liquidity. I do this thing every day. This is my own exercise. As Sola spoke about his own exercise, I do my own exercise. This is my own. I mark out these places first before I listen to any. I get the news, but I mark these places first because I know these are the areas most buyers, retail traders that don't know what is happening will sit down ignorantly, just the way I was doing 10 years ago. It's not when I'm from 3 or 4 years ago I started, and I've been trading relative strength indexes, MACD divergences, which I'm an expert in picking divergences using RSI and MACD. There are people that's what they see trade. We're using moving average as support and resistance. I'm still good at that. I use that to trade when I want to. So, just a moment. Okay, let me just leave it. I wanted to just check out this and keep this by the side so that my screen will look clear. So this was the sell side liquidity. Sorry, I wrote something else instead of side, but we all understand. Just for the purpose of, because this whole thing is being recorded. Then, all right. So we have the sell side liquidity and the buy side liquidity. When this market came here, you find out that there are highs, higher high, and lower, higher low. You can begin to pick them. You can pick them. Every market has high. This market has its own high. That's another high here. This market is. Find out there's another high here, right? And then it has a low. Picking these tools and here it can be serious work. So there are micro sell side and micro buy side in the bigger picture. So But when the trend ends when the buy side, micro buy side is broken. I will explain to us what I mean by that. The cells that I put here has disappeared. Okay. So just be patient with me. You really enjoy, you test run these things on yourself and you find out. So you find out that the moment this happens, we give it another name, break in structure. Break of structure. Now, just keep this side by the side. You understand what I'm trying to explain earlier. Now, this point, this market as it's coming down has several high points. This is another high point for this particular downtrend. This is another high point for this downtrend. You can also take this another high point for this downtrend. You can also take this point. You have to mark, this is part of the exercise you do. You mark all, when the market is in a downtrend, you mark all the highs. You mark all the lows. There's a reason for that. Now I have an indicator that does all this work for you, so you don't have to do it manually. But I don't have to put the indicator, so that I'm trying to show us how these things are done manually. Now I have indicators that does all these things for me. I don't have to do it like this. It takes a lot of time. But I'm just showing us the foundation of some of these things so that when you set the indicator, you know what the indicator is doing. So you set this high, low, while the market is coming down. So the moment any of this side, the market is coming down, as you can see. But the moment any of this high is broken, that means that this downward structure is changed. We say break of structure. At the point where this high, we might take this high. Let's say, let me remove this high, right? Now you find out that the market breaks this low and come down. It breaks this low. When the market is coming down, concentrate on the lows that are broken. Each of these low that is broken is called break of structure. The short word we use is BOS. Sort of writing big word like this, you just write BOX. What I'm showing us here is what I wanted to teach those that you might be serious in the forex class and they wanted it to be free. Some of them got a hint of it and started chatting, and those are the things they wanted to. I found out that they wanted to get everything for free, and then we concluded no, there's no point continuing with that. Even the last class, the internet affected me, but these are some of the things I wanted to teach, and teaching this is all you need to make money in any market. Now, you don't have to be writing them like this and mark them, but I'm doing because I'm teaching it here. These are the BOS. If the market is going up, we keep on marking the same BOS. The high, the high that forms. We pick the high like this. This is my BOS. Now I will show us something where you can know these are points where the market makers, we call them the market makers, are positioned. We call them MM. or some people call them SMC, smart market companies or smart market, whatever they call them, SMC. Now, some people call them SMT, smart market tools. What they use. I was surprised to find out that these market makers also have a system that looks like this, where they already know where retail traders have positioned their stop losses, where they have positioned their take profits. Now, the moment this market break of structure, each time the low in a downtrend is broken, we call it break of structure. Each time the low in a downward trend is broken, break of structure. It also has a high. We are also watching what is happening because we are watching the market makers. The essence of this is to know when the trend changes. You enter like this. So you might find out that this movement up like this, retail trader will say, it's a buy. But we understand that we're in a downward trend. We now target maybe 1 to 2 or 1 to 3. We understand that this short movement will give me 1 to 2 reward, risk to reward. I'm out. I'm waiting for the market to break. When this thing kept on happening like this, and then this is the high, we expected a break of structure, but it did not happen. What happened? The high of this low from here to here is a range. This range from here to here had a high. And we find out that this high was broken by this candle, this particular candle. This is complete change of structure. And this candle happened last Friday when we had the NFP. This NFP kept on, this market kept on, this is gold now, kept on happening, telling that the market has changed direction, telling that we are in a bullish market. You see this short upward market, the market came down, went up again, came down. Now, came down and went up again. There's the break of structure now. This is another break of structure. Now, every break of structure at the top like this is also a buy side liquidity. This is a sell side liquidity. This is the external liquidity where it all started upward to this point. Each of these break of structure you are seeing, this is a sell side liquidity. Each of this break of structure is a sell side liquidity. Each of them is a sell side liquidity. And each of these stock also is a buy side liquidity. So where the market revises a buy side liquidity, or where the market breaks, this is a sell side liquidity. But this sell side liquidity, if you position that you will buy from here, when it's a downward trend, it will take you out and you now lose money. So in a downward market, you'll be looking for opportunity to buy from the buy side liquidity. At this buy side liquidity, what we are looking for when the market was coming down, we are looking for when sellers are entering, because sellers from this point, some people will buy. We were looking for when the liquidity is purged. What do I mean by purged? This is an example of what I mean by purged. This sell side liquidity, look at it replicating itself here. This is replicating itself here. When you look at it here, there is something like this here. You expect this market, this serious manipulation going on, this market will come here and then the body will close above it. Let me expand it like this. This is on 1 hour. We know that this market will go up, but before the market goes up, it takes out some people, because if you enter from here, this point now is your resistance, and you expect that this point, this resistance, this is a resistance here, this point here is your support. What we expect at this point is for this market here to come here and close above. It will not close below this point. Close the candle this week here will come here and go up. The week here does the damage, takes out all the stop loss and then continue upward. Why? Because you know that the change in direction started all the way from this point. Started from this point where this high was broken. And where this high is broken in a downward trend where we are having micro high happen, where that thing happen, we change it, we call it shift. This particular point has a different name to it. This particular place, we say change of character. Short, we call it CHOTH. This particular point where in a downward market like this, and then the up, which is the normal resistance, is broken. It didn't break here, it came down. Then it forms it, then it came down, formed a low. Formed a low, which is this point. Formed a low, which is this point, and then went up and formed another high, and then came down. We expected this market to come down. It did not. Rather, it went back and break the resistance. This automatically tells you, if there's anything you learn this night, is to understand when a trend changes direction. And the change in the direction is when the resistance in a downward movement like this changes direction. You don't begin to think about selling. When this happens, you begin to just look for opportunity to buy. This is a unique case because when non-farm payroll happens, we wait. When the non-farm payroll happens like this, we wait for a little retracement. Most times, you wait for 50% of the midpoint of the candle that changes this direction, that changes the whole trend. Midpoint of it is where you actually buy. So most times, analysis on a non-farm payroll does not really make sense. What makes sense is that trend has changed direction. You were looking for opportunity to buy. You can use any indicator you prefer to use to trade. And since the NFP has happened, the market has not even been given a clear direction. It has just been zigzag. Normally, this market is supposed to come here and then take out stop loss, hunt for stop loss at this point, pretending as if it's going to go down and then goes up. It takes out the stop loss of people and then continue upward. Now you look at this point, that is what they did here. All these things, I'm just giving us a holistic concept. We will now narrow down to entry, but which I can't talk about it here. This just give us a concept of break of structure and change of direction. Change of direction is when the upper limit, this just what I just described here, is broken, particularly with an aggressive candle like this. You don't begin to look for opportunity to sell. No, you just look for opportunity to buy using either relative strength index. If we are using relative strength index, let me come here and pick the relative strength index. Let's say we are using relative strength index. Oscillators. This is relative strength index. Pick it. Relative strength tells you. Now, see, even your relative strength is telling you that you are at support. This, if you are using these indicators, why people keep on losing money. Now, it has changed direction and it's telling you that the market is oversold. If you're using RSI, look at it here. And then you begin to look for opportunity to sell. You can only sell and you're thinking that, okay, I have entered sell now. Look at this, it has gotten to 70 points, and then you are entering sell at this point. While you have entered sell, look at what this candle did to you. You are thinking that you enter sell, you want to come down to the lower part of the band. Look at this point, the lower part of the band. You enter sell at this point. The lower part of this band here, this lower point, look at where it is here. But meanwhile, this particular candle has taken you out, because when you enter sell from this point, you are going to put your stop loss somewhere here. You put a stop loss somewhere here. This candle has taken you out. Meanwhile, you are looking at the RSI at this point. You are saying, the RSI is showing me that we are coming down now. Even if you look at the RSI is telling you that it's showing you a divergence. This is a divergence, RSI divergence. And then the market is going up. Based on this, now you say, we are in a sell. But from this point, you have already entered a sell, expecting the market to come down maybe to this particular resistance. This point now has become your support. And you are thinking that you come out from here and you go to sleep. This is how people, including myself, have lost money over the years until I started studying liquidity zones. Because then I will trade this divergence and the RSI is coming down and the market is going on. I will now enter sell from this point. Well, with this one, I don't make sense, but I now understood this. Now on 1 hour, I will expect the market to come down to this particular support level. But look at the RSI is even coming down faster, but the price is not coming down faster. Telling you that you should not be looking for opportunity to sell in this market. I should be looking for the next divergence that supports the change of structure. I'm looking for divergence that tells me market is going up while this one is coming down. If you all understand how to pick divergence using RSI, I'll be looking for when this market is like this, when I see something like this, and maybe this price is down like this, and then my RSI is pointing up. That means that the divergence is supporting the change of structure. When you find that is when you should enter. At this point, you are not entering the market, you're just watching. Everything must show you when I should enter this market is when either this price comes and take out this liquidity zone, something like this. I expect something like this. I expect something to come down like this, break this level, break this level, and then bounce back. Bounce back. This time around is going to go higher than the previous high. This is an intermediate high waiting for me. This high is waiting. So at which point should I enter buy? I'm waiting for when a liquidity buy liquidity side. This point are liquidity points. These are liquidity points. This side is a liquidity point. But I will not enter buy at this point. At this point now, this is how you should be entering the market. The entry sorry, I'm trying to pick this tool. The entry should be somewhere here. You can put your stop loss below, not too large, maybe 10, 20 pips away from your entry. This is how you're supposed to trade this market. So meaning that somebody will see gold coming down. You can enter fair low if you want to take out the gold. But if you want to leverage and enter safe trade, wait for liquidity zones to be taken out. If I magnify this thing, you will see the damage. This is on 1 hour. You will think the damage this candles make. This 1 hour candle was a liquidity zone. The low of this candle you are seeing. Look at what this candle did. Took it out and went up. But that's not the kind of liquidity zones we are looking for. We are looking for liquidities, clean liquidity zones. Look at this is a liquidity zone. This point you are seeing, this retracement you are seeing, is a liquidity zone. We take it to the future. As I'm talking to you, I'm telling you where I'm waiting to enter buy in this market. I can set my pending buy limit waiting here. Patience is key in this business. Impatience has cost us a lot of money. You can use this and just trade twice or thrice in a week. In some week, it's better you don't even trade than to overtrade and lose money. Now, this is for position trader. Scalpers can just scalp every high and every low. And I've not seen scalpers that have made serious money in this market. Position traders are the ones making serious money. Swing traders, I mean. Because they always wait for liquidity zones to be taken out. Now, we only know that market has changed character. The essence of all these markings I was doing all this way is to know when the market is going to change direction. When the market is not changing direction, at points when I know that we are in a downward market, what I'll be targeting, I know that we're in a downward, I'll be looking for sell opportunity. What do? I mark liquidity zones where most traders will be entering. Now look at, do you see where I picked this high? Before this high was formed, there was this high. And this is the highest high. I plugged this high and kept all this candle. Do you see what has been happening? They are not closing above. Even this one, there was no high volume. Look at the way this market fell. Look at the way. So when I enter from this point, my target is this point. So when the market, then I look for this point. The market didn't even stop here. Came down. Me, I'm looking for buy opportunity. Came here, went up again. I'm looking for another buy opportunity. I mark this top, this high. I mark this high. I mark this high, waiting for market to reach here and retrace downward. The market broke and went up and closed above here. Now, you say this one closed above it. I cannot take this candle as serious. The market has to be aggressive for a change of structure to tell you, look at most sellers that we thought that, okay, for example, let's say I entered, I didn't wait for liquidity to be taken here. I just entered thinking that I will come out from this point without waiting for this high to be broken and retraced downward. I just entered sell. This candle will have taken me out. I entered sell here to come out from this point. This is how most times we have been trading, because market has reacted from this resistance. Enter sell. You just enter sell from the next candle. We are expecting to come out from this point. Maybe you can just make some small money and you are happy you have made money as a trader. But you don't understand the story behind what is happening. I'm just showing us how market makers have been dealing with traders. You make money today, tomorrow you begin to think, you say the RSI that is wrong. What is wrong? Because you are using relative strength index to trade. Even this relative strength index has not even reached this point, but it has touched the support, the resistance level. And you are waiting for it to touch this level. It didn't touch and went up all the way. I use this and I know how frustrating RSI dealt with me until I learned liquidity. Now look at good relative strength here at this particular overbought aligns with this point. Now look at my other block here has been formed. I'll be showing us, I can't finish everything today. I'm teaching us a lot, but I just want us to, I won't talk about this other block today. I just want to talk about structure. What I'm teaching us today is structure. Maybe the next class is when I'm going to teach us sniper entry. Why and where to enter. It's not enough for you to just enter at this point. What combination of candles you still need confirmation? Those I showed us in synthetic, the confluence of the upper and the lower band, and then the spike catcher, and then the verified support, the verified resistance. When I apply that indicator here, it will show you verified resistance, verified support. You can use that in a downward market to know that the market is coming down. I should only be looking for sell opportunity. because this market is coming down, I should only be looking for sell opportunity. Looking for buy opportunity here is risky, because when you're looking for buy opportunity here, look at this market has breached this particular sell side resist. Sell side, this is a sell side, this particular low support is a sell side liquidity. Then you say, let me buy. And then you see that this candle has purged it and closed above. We enter buy. This candle, this particular candle went up. We saw it was initially going by. Only of a sudden, look at the way the market came down, and you lose and get frustrated. You are not supposed to be buying. You're supposed to believe this is where you're supposed to be selling, because the overall market has been given. You see breakage. You saw first. This is the first break of structure happened here. You saw it. Another break of structure. In fact, it started all the way from here. At this point, it wasn't even a break of structure. It was change of direction. What I wrote here. This is where it started. This is change of structure, change of character, rather. Look at it. This downward, this upward move while it was going up. In fact, this is where it started here. When the low, look at this low was not broken. 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 The moment the high of the low of this high was broken, there is a high here, there is a low. The low is not broken. There is a high, there is a low. It was not broken. There is a high, there is a low. It's not broken. Look at this high. Look at this low. The low is not broken. This low, this low, this low. They are all support resistance. Resistance, support. Resistance, support. Resistance, support. Look at the resistance here. Now, look at this resistance. This is actually the resistance. Do you see the way the resistance was taken out? The resistance was taken out by this particular candle and then closed below, meaning that while buyers that are not patient just enter, boom, this market came down. You set out, you enter maybe the normal buy. You just buy. You know, you should take after to risk to reward 2 or 3. You are out. You are waiting for opportunity to enter buy again, and you saw this thing happen. It's telling you, push. This guy wants to change direction, and then they gave you a low here and went high again, and then came down. That's why you have to be patient and understand what these guys are saying. The moment this happened, we know that there's a change of character. We now saw here again happen. What happened here is break of structure. We saw break of structure here. So I'm ending this video now. Please, any questions, so that I think we have spent enough time. We can't talk everything today. But I think I just want to show us structure, market structure, before we can talk about entry, because I believe this is a continuum. We are not ending. It's not a 1 day intensive class. Today I just want to show us market structure, and that's what I'm showing us from scratch, without any indicator. While you might be leveraging on your relative strength index and you wonder, why has the market gone against me? You must understand the structure of the market first before you think of using any indicator you are comfortable with. Understand the structure. So the change of structure told us this change of structure automatically. Everything that is happening from the beginning of this change of structure, they are all called internal liquidity, or these bill up. They are all resistance, support, resistance, support, resistance, support, resistance. They are all internal liquidity. Where this downward movement ends and turns, it becomes the external liquidity. And then to the next, that means where it began here is your external liquidity. So this market, we're expecting a reaction all the way to this point. Goal is not here yet. This how far goal will go back. It has to go back to this point. So, and to get back to this point, it started to move from this point by this change of structure. So we're looking for opportunity to buy. So if I get my first entry from this point, I might wait till get to this point. Now, we cannot just trade blindly. We still have to judge with the fundamental news to see whether the news support movement to that point. So let me stop here. I think I have spoken enough. After you have done your structural analysis, you just use JUFO as an additional confirmation to just enter your trades.